Good Monday morning. It's 5:30 in New York. It is November 5th. I'm Lauren Simonetti.
It's midterm week. Good morning. I'm Cheryl Casoni.
Midterm Monday. It's also earnings season. Third quarter earnings season winding down this week, but investors will get to hear from some big names nonetheless, including Dow component Walt Disney. They report on Thursday. David Nicholas is the president of Nicholas Wealth Management, and he joins us now. Good morning, David.
Hey, Lauren, good morning.
What do you expect to hear from Disney and some of the other big media companies like Dish and 21st Century Fox that are reporting this week?
Yeah, I think we'll hear good things out of Disney. Disney's expected to come in around $1.31 per share. Earnings expected to increase as well. So I think there's a lot of excitement, obviously, around the 21st Century Fox merger, but a lot of it is, to me, focused on the streaming services. So, I think there's excitement that's going to come out about Disney's ESPN Plus, possibly Hulu services. So I think it's a buy for Disney right now, in my opinion.
And that's more competition for Netflix. And, of course, we've been watching the so-called FANG stocks in the past couple of months as they give up a lot of the value that they gained. We got the jobs report, a blowout jobs report for the month of October. We got that on Friday. It's a gift, if you ask a lot of people, for Republicans as Americans head to the polls tomorrow. But we did see that wages grew 3.1% year over year. What does that mean for the Federal Reserve, that we got that basically the best wage growth in a decade?
Yeah, Lauren, it was refreshing to see this. We hadn't seen this once under the last administration, so it was a big change. I think this is speaking to where is inflation. And I think this is what the Fed is focused on right now. 3% wage growth. This is telling us that we're starting to see inflation in the market. But, the question is how long will that trend of inflation or wage growth continue? And for me, that's really what's concerning. But I think the Fed is going to take this music to their ears to say, hey, this gives us another reason to raise rates. So
do you think
I think
they do that?
Do
you think they do and say that this week when they meet?
No, I don't think we'll see it this week. I certainly think we'll see it in December. But there's questions for us, right? As far as, if you remember October 3rd, when Powell came out and said that current Fed policy is extremely accommodating, that we're a far way away from neutral, that spooked the markets. I think a lot of the volatility that we saw over the last few weeks had to do with that. So I'll be watching Thursday, but I don't suspect that the Feds are going to use any reason to pause on a rate rise.
And he said that in the beginning of October, knowing that October kind of freaks us out no matter what year it is because it's October. The last wild card, or the creator of this volatility, is trade. On Friday, we saw this amazing volatility because do we have a deal on China? Do we not have a deal on China? When do you think we resolve this issue?
I think we're in a market right now where any news can be bad news. So the trade issues that we see, while it may not impact us significantly economically, I think there are concerns for the markets. I'm hoping we'll get a resolution here soon. I don't think either government, the U.S. government or the Chinese government, want this to linger longer. So, I think hopefully we'll see a resolution by the end of the year. But if not, I think that'll give us some headwinds into 2019.
Yeah. Well, Alibaba said on Friday that they're cutting their full year numbers because of this potential trade war. So it's a big issue for them and for us. David, thank you.
Thanks for having me, Lauren.